These buyers paid top dollars for their home in the pre-construction space from Mattamy, and now Mattamy is selling homes next to them that are the same thing for less. Yeah, that's gonna sting a little bit. That's the first article we'll be reacting to. And then the second article we'll be talking about is investors own big chunk of Ontario's condo market. There's gonna be some interesting stats coming out of there. It'll be very interesting. Now, if you're looking for some help on how to navigate this real estate market, whether you're on the offensive or defensive, or just trying to figure out what's actually going on, because honestly, like every single market is different, every single micro market is different, and depending on what type of asset you're looking for is also very different. So you need to have someone who understands all the data for you to parse through all the BS that is going to be coming in the next few months, so you actually make the correct move in the real estate market. And if you're looking for some help in that specific kind of manner, you can book a call with me using the link that's right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen, and I run and operate a RE/MAX in the Greater Toronto area, on top of making awesome educational real estate content just like this. And unfortunately, the first article we'll be talking about is how some buyers are in a really tough bind. And I have to use this as an example because I need to get the message out there. I've been talking about the risk of pre-construction for a very, very long time, and I feel like it's just going on deaf ears. So sorry, people who bought into this project, that you're being used as an example. But let me just kind of read out to you what Toronto Star says. They're basically saying that these guys were riding high in the real estate market when it was doing really well, and they never expect the home values to fall so low and interest rates will rise so high. Look, a lot of people are in this situation, but when you buy a pre-construction, there's other risk that comes along with it. And their builder, Mattamy, is now selling the same type of home in the same community for a few $100,000 less. That's rough. Now, they say that they're facing financial devastation because their bank appraisals are coming up short for the amount they agreed to last year to pay for their homes. So this is what I was saying a long time ago. If you buy pre-construction, you're not buying a home. You're buying a contract for the rights of the home set at that price. So if you're like, a trader, that's like an options contract, right? But the problem with this is if prices go up, you look like a genius. The builder doesn't come up and get money from you because you made money because the market appreciated. But at the same time, on the flip side, if you lose money, that's on you as well. It's basically a form of gambling. And this is what I've been saying before. You need to know the risk that you're going into. What these people are running into right now is that because they say they bought at $2 million and the home is now only worth, call it like 1.6, the bank only thinks it's worth 1.6 and they only give them mortgage called 80% on 1.6. So the delta that they kind of are shortfall of 400 grand, they have to pay that out of pocket because the bank doesn't believe that's how much it's worth, on top of the 20% of whatever $1.6 million is. And I'm not going to do live math for now because I failed that last time. So it's a lot of money that's coming out of a lot of these people, and they can't kind of get there, on top of the rates being really high, so they can't really service it. So the challenge, and why I don't really understand why Toronto Star is writing this, but I understand why the people are kind of, creating this perception that they're in a lot of trouble, is that Mattamy is undercutting them and it's making it impossible for them to close. Look, I get it. Mattamy is a business. They have to continue churning, and they're a really big business, whether the market is up or down, to keep kind of the business momentum going and the business going. They have to sell regardless of what the actual market is looking like. So you can't blame Mattamy for selling prices for less because they need to get their business going. The only problem is you bought a contract in a peak of the market, and now the contract doesn't prevent Mattamy from selling it. So if prices do fall, and yes, Mattamy can't control that, then yeah, you're kind of, caught in the middle, and you're going to be suffering financial damages for it. Now, here's the interesting thing, and I'm going to give you my take on it, right? So they say the builder needs to offer some kind of relief. While I do think if you're in this position, you generally wouldn't advertise that. I think these guys, and I'm going to give them a little bit of credit, are smarter than what they're, being written about, because previously in 2017, Mattamy did have this similar situation before, and I'll show you some articles shortly, and there was low-key some price reductions from what I recall from talking to other people in the industry. So maybe that's what they're trying to kind of get at. They're trying to appeal to Mattamy so that's in the newspaper, so that they don't have like a reputation damage. And that's what I'm giving them a little bit of credit for. But because I've seen this happen many, many times before, right? This is not the first cycle I've lived through. This is why I've been saying pre-construction stopped making a lot of sense a while ago, right? So here's an article from 2017. Price drop crushes pre-construction home buyers' dream. 2018. This is when they're closing. They bought in 2017. Very similar, right? You can see right here, this person paid $955,000 for a really large detached home in the Mattamy Queens Common Phase 2, and now they're selling it for, at that time, about 100 grand less. Exact same scenario, 5 years later, right? Exact same thing. I've been calling it out. It's also the exact same builder as well. Look, here's another one, same time. They bought their pre-built homes at the market's peak. Now they face financial ruin. It's like Toronto Star just returns, like using these same headlines, right? It's because this happens all the time. And then here's another one. Oakville home buyers purchased at their own risk, housing minister says. And this is what I'm saying. Nobody cares. No one's kind of like going to save them. But because I think Mattamy is trying to get them to close, maybe they can work something out. I don't know, but I did hear there was some kind of price reduction. And I think this is why this one's actually written. Now, this is my biggest gripe with this entire article. If you ever read it, it says, this person says he doesn't know who to blame more. The builder, the Bank of Canada that hiked its key lending rate 8 times between March and January, or the Prime Minister, Justin Trudeau. Come on, man. Like, just own up to your own mistake. Like, it's a mistake you made. It's going to cost you something. But why are you blaming other people? You're the one that signed on this, right? And the thing about Mattamy is Mattamy doesn't even work with realtors. So you can't even blame your realtor. You walked in and you signed that contract. And if you were a lawyer, you should have done your own due diligence or at least understand the risk, because you are providing that kind of consultation for other clients who you are reviewing their pre-construction agreements with too. So I'm like, mind blown, just mind blown. Yeah. Hope this kind of serves as a lesson out there right now. Maybe I didn't have as much of a reach back in 2017, but this is not the first time it's happened. If you are buying a pre-construction, whether it's a realtor telling you you're buying yourself, understand that if prices fall, you're on the hook for the delta on the appraisal. If prices go up, you look like a genius. So when you're coming up to it, you need to understand how much money you need to put aside and what the market is looking like, especially if you're building low rise, because they can complete and close these things within like 18 months. Whereas at least with condo, you have like at least 5 to 7, 8 years, depending on the height of the building. So when you're buying a pre-construction, like a low rise, like a detached home, that is like, call it, 2 stories and 20-30% higher than what the surrounding area is. If the market goes sideways, you got to be prepared to come up with that extra $20,000-$30,000 appraisal premium. So that's kind of why I've been saying pre-construction hasn't made sense, especially in the low-rise space. Condos, maybe if they start to rebound. But understand that is a huge risk. And when the market kind of cycles through again, we'll have our little drop and then it'll peak back up because we may have a housing crisis in like next 5-10 years. I don't know. This is going to happen again. Let this lesson stick in your head so you don't make these mistakes again that these people have. That may sound a little bit harsh, but I'm just trying to get the message out there. Hopefully you learn. Now, if you found this content helpful, I'm pretty sure some other people as well, especially if they're contemplating pre-construction right now, send this to them so they actually understand the risk that's involved. And while you're at it, make sure you like and subscribe to the Prime Properties channel. And if you are looking for some help on how to navigate the real estate market, you can book a call with me using the link right here. It's www.chatwithzen.com. Or honestly, like if you are even just contemplating buying a pre-construction as your first home, maybe not. Or if you need someone to talk you out of it, you can also book a call here. I've done that many, many times in the last year. Yeah, I actually have. Okay, so the next article we got here is investors own big chunk of Ontario's condo market. So I'm not going to go through the article here because what they're referencing is basically there's this report that came up from Stats Can about how many people own properties that are, call it real estate investors in 2020, right? So I'm going to give you a couple key findings here because I've kind of talked about something similar to this before, but I think this is a little bit more legitimate of a data because it's coming from Stats Can. So the key Stats Can has here is that basically 20% of the properties running from anywhere in Canada are owned by investors. And in Ontario, where we are, it's about 31%, and even around the same in Nova Scotia, which I find surprising. Interesting. But I kind of not too surprised because I guess people would have went to Nova Scotia because the numbers worked a little bit there. I'm surprised Calgary isn't on here. Now, the other thing here that's interesting and why everyone's writing about it if you're in Ontario is Ontario topped the list of the highest rate of condominium apartments used as investment at 41.9%. Wow, that is 2 in 5 people. That's a lot, right? So now a lot of people are freaking out. Investors are ruining everything, blah, 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 whatever, right? So I'm going to go down here. Now, what they say here is what is an investor? It's basically anyone who isn't claiming this as their primary residence or they're not in the country or out of province. So that's how they're deeming as an investor. Now, my challenge with all of this, and when I scroll down here and get you the numbers, and as you can see here, a lot of people that are investors are investing in the core cities of Toronto and Vancouver with Toronto having 42.1%, mostly condo owners as investors, and then in Vancouver it's 32%. See, my problem with this data here, especially in 2020, is that a lot of people may look like investors, but they're actually not because of the way they're tracking this data. So I'll give you an example. If my parents gave me money to buy a property because I can't afford the down payment or I needed to co-sign on it and they are on title, they still have their primary home, but they're on title for my property, but I needed their financial ability to do so. So what that means is that from this way of calculating, my parents are an investor. Even though it's my home, I live in it, I don't rent it out. And ever since the stress test happened in 2018, because the ability to borrow has been reduced, the circumvention around it is to get someone else to help you qualify, mainly parents, because they don't have as big of a mortgage and they have two incomes and they're probably helping the kids. So the whole thing is we don't know how many of these things have happened. And I bet you anything in 2021 and 2022, where a lot of this data is calculated, tons and tons of people were getting financial help to co-sign a mortgage with them as prices were being elevated and people were afraid and FOMOing into the property. So from talking to a lot of my mortgage broker, he was telling me like anywhere between a third to half the mortgages for end user type of properties was being co-signed by a parent or a family member. So is that not going to skew a lot of this data because there were a lot of mortgage originations in the last 2 years because it was like hundreds and hundreds of thousands of sales that happened? Yeah, absolutely. So do I think this number is a little bit skewed? Absolutely. Do I think even after it's being a little skewed, it's a little bit too high? Also, absolutely. But here's the flip side of this and why you need to understand. If you're an end user, especially in the condominium space, you're generally not buying a condo and waiting, call it 5 to 7 years of an undefinitive time of when it's going to close so that you can go live in it. Because you know what? Especially if you're buying a condo, you're probably starting off early in your life. In 5 to 7 years, a lot can happen. You could find a partner. You could have kids. You could have moved to a different job. You could have not want to be in the area anymore. Tons of things happen. So that's why a lot of people who are looking for a home to live in don't buy pre-construction, which means that the only way for these buildings to be built is for investors to buy it. And the way this works is builders have to basically, with the exception of a few, have to sell 65 to 70% of the inventory to take to the bank to get construction financing to actually build the thing. So without investors, we have less supply. So you do need investors to basically buy these condos. And as more and more condos have been built in the last 10 years or so, because we've had a condo boom, more and more of these buildings had to been financed by investors buying them. So will we see a lot of these numbers continue to go up over time? Absolutely. Are investors going to have a target on their back because they're basically investing into this? Of course. I've been saying this for like years on end, but you have to understand they are part of the necessary, call it evil, to build housing. Because if you look back, how much homes have the Ontario, or actually just look at the federal government built in the last little bit. These guys go out there and they're like, oh yeah, we built 15 units in Brampton or like 30 units in Waterloo. That's nothing. One condo is like 400 units. So you kind of need these investors, unfortunately. Now, are investors contributing to prices going up to an extent? Yeah, they actually are, because as more people buy investment properties that have more equity, they can continue buying more, which prices a lot of first-time home buyers out because the down payments are very difficult. So that kind of like wealth gap becomes harder and harder. So that's also a problem. I don't have the solution for it right now. I may have some ideas, but unless you have the solution, blaming investors because the problem is set up in that manner isn't really a solution, and just getting them out may actually cause kind of a housing crisis in the future that, is not going to be any good for anybody anyway. So while investors aren't great for prices, they're required for supply. Anyways, that's a wrap. Hopefully you got some kind of education out of this and learned that one, pre-construction has a lot of risk, and two, investors aren't that bad. They are driving the prices a lot, but they're kind of required and part of the necessary evil of building more homes in Toronto. And if you're looking for some help on how to navigate this real estate market, you can book a call with me using the link that's right here. It's www.chatwithzen.com. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.